24th. Another one trade day. Basically, this is what we're looking at today. Pretty simple day, honestly. This is open. We had PMI today, not yesterday. I don't know why I thought it was yesterday, but PMI was in this bar coded out area. It was at 6:45 my time, 9:45 Eastern time. And basically after this, we had here, I'll draw it in. We had this very sideways-ish downtrend out, which had overshoot right here. So what overshoot will do is usually reverse the market, which obviously it did. So we had news, downtrend, overshoot, reversal. Here's your higher low reversal pattern right here on this candle. And from this pivot over, the whole rest of the day was bullish, except for obviously the end of the day, which we'll get into. But basically we dropped out of this uptrend, consolidated. Here's your gap telling you, well, first of all, we're in range, right? So most breakouts / breakdowns fail. This breakdown failed, came back into the range, and then we created a gap. If you've seen older videos, I've harped on gaps in ranges that immediately go back to the other extreme. That signals that we're gonna break the range, which we did for the new high. So in this whole area, you're looking for longs because we had a break, and now we need a new extreme of this uptrend. The book is not balanced up here. So you'll see an unbalance of orders up here. Whether they're buys or sells, doesn't matter. That's why you see a trend get broken and then come back to create a new extreme. That's why. And honestly, it's one of the more reliable portions of the market is break new extreme, because that's exactly what I took after. So after this new high, you are, after any new extreme, you're expecting either reversal or consolidation. Or sometimes you'll see continuation in an uptrend or a downtrend. Most of the time, though, you're just going to see consolidation like this or reversal. And today we saw a reversal. I took one trade. Basically, we started trending down out of it. We broke it, created a new extreme right here, which I didn't write in because we created a downtrend from this pivot. And when we broke it, I was actually wanting to take, there's a second entry short right here that failed EMA. And I had my order, I had a limit right here. And it just went without me. And it went for 4 points. Kind of glad that I didn't get filled in that though, because that ended up obviously breaking. And from this point, we need a new extreme. So I was looking for a second entry short below EMA, which we got right here. The reason why I got into the second entry short, which I got in a little late, that's because this candle is the second entry short. It went from chilling right here to nuking and then coming back up. So I got in a little, actually I got a better entry than I would have, so it's actually better. The reason why I got in this trade is because we broke the downtrend and we need a new low or a new extreme. And we popped up, failed to, the reason why I wasn't waiting for this little up channel, this correction up channel to get a new extreme is because we created a reversal pattern, which is a lower high right here. So I was like, okay, we're not going for the new extreme high, we're going for the new extreme low, which when you're looking at new extremes off of channels, a break new extreme, the larger channel takes precedence over the shorter correction phase. So if you correct out of a big downtrend and then you correct out and you break it, and then we pop out of that and you're like, oh, well, we need a new extreme for this uptrend. Yes, that is true. But if you get a reversal pattern like this, then the main channel takes precedence over a correction channel. Same thing if it was flipped and we had an uptrend and then a break of an uptrend. This new high takes precedence over a new low. So basically I was looking for any reason to go short here to get the new extreme, and we got it for $175, aka how many points is that? That's 3.5 points. I wanted 200 again. I'm always wanting 200. However, where my cursor is where I got out. The new low was just below that, but when I go for new low, well, new extreme plays in general, I don't like to go past the actual low. So the actual low is right here. Right here. So we would need to go past that to get a new extreme. But sometimes you'll see new extremes that don't actually go all the way down, and it's just an attempt. So you'll see a new extreme attempt, but you won't see it actually blow through and create a new low like this. So usually I like to take it at least 2 ticks, sometimes 3 or 4 ticks above the actual new low, which is where I got out on this one. It's usually smart. I think that's the way to go. Like a month ago, I took a $200 play for a new extreme high, and I had it 2 ticks above the actual new extreme, and it literally ticked me out and reversed. So anyways, today's play, new extreme play, second entry short, good signal bar, rejection off EMA, in power hour, which I never trade power hour. Today is very, very rare. So yeah, lesson of the day is draw your channels, respect your channels, and respect new extremes. And that's it. See you tomorrow.